Hello. Hi, everyone. Today we are going to cover procure to pay P2P process in this video. And I'll be doing this video in English because there have been requests from my colleagues, from multiple people who watch my channel, and from many others who wanted to have content in English so that they can consume it better, they can understand, and they can implement it. So it would be like a refresher from what we've already done. And also at the same time, we'll cover in English so that a broader audience um, can take the benefit of the content. Uh, by way of introduction, I'm a chartered accountant and a certified internal auditor by qualification, and I have been doing internal audit for the last 8.5 years. And I have worked in both big fours as well as in industry across the globe. I have done the audits for different type of clients, and I've covered almost all the type of audits that we consider non-IT audits. So in this, today we are going to cover procure to pay process. This is one of the most important process which generally people ask or basically focus upon, because this is something wherein there's a lot of fraud risk and it's very frequently talked about. So in P2P, it will cover in internal audit, almost everything starts with planning, right? Planning, or we can say budgeting. So, firstly, there would be a budget for procurement for both capex, which is capital expenditure for fixed assets, basically land and building, machinery, those kind of capital expenditure, R&D. And then there is opex, operating expenditure for day-to-day running, for manufacturing, or for procuring raw material, packaging material, for procuring services. So all those things would come under opex. So firstly, there's a planning done. There's a budget assigned to everything. And then based on that, if you want to cover how budgeting is done, that's part of FP&A. So with that, we will cover in a separate video. So based on this planning on this budget, every cost center or every individual department will have a budget. And whenever they want to buy something, they raise a purchase requisition, PR. So in purchase requisition, basically, the person who needs a good or who need service, that person will basically raise a request that I need to procure this item. Um, Please tell me if I can go ahead with it or not. So the idea is, firstly, if it's goods. So we check in the existing inventory if it is there or not. And if it is not there, then the PR is raised. And then the PR is approved basically by the person if based on their approval levels. So if someone has a higher approval limit and the procurement is of higher value, then it will go to that person and so on and so forth. So the firstly the PR is approved, and then in some companies PR is not necessarily needs to be approved as per the authority. So in that case, purchase order PO would get approved as per the approval limit. So it's either of these two, either PR or PO. But basically, firstly, PR approval is taken in which all the criteria and everything is defined. Based on that, once the PR is there, the next step is basically procurement. The request is now in procurement's hand. What procurement will do, um, based on the value of procurement. It's not necessary for everything. I will go and do bidding. I will go and approach multiple vendors. If it's something small ticket or something I buy regularly, or if it is very critical, I have a dedicated supplier for it. So in that case, a purchase order will be created and directly it will be sent to that person because we already have a contract with it. Rates are finalized. Everything is done and dusted. So those are long-term procurement contracts that we have with certain vendors, certain suppliers, which is more strategic in nature, or to save day-to-day activities or efforts. For certain things, we have rate contracts also, that for this type of item, I know I need to buy, let's say a very common example, if we need to buy stationery at a very frequent basis, so I have done a rate contract. I can simply put that order and it will come to me. We need not go into the value is not much, and it's a very frequent item, so we need not go into negotiation every now and then. But let's say it's a one-off item and it's not as frequently required. So what will happen? Then the procurement will identify what all vendors are there available in the market who can provide this good or service. And then procurement will also ask the user department, the person who needs that good or service, that if you can suggest some of the vendors. The vendor onboarding in itself. So we've discussed about PR, then vendor uh, onboarding. So if it's a new vendor, it's not already there in the system, it has not provided any goods or service in the past. So vendor is onboarded. It's registered, its compliance checks is done, screening is done if we are okay to do business with this vendor or not, and all the financial due diligence, its past history, certain background, all those things are checked, and then the vendor is onboarded. Once the vendor is there, or we have existing vendors, to all those vendors, a RFQ, request for quotation, is sent. And generally what happens, it is sent through mail. All the vendors are kept in BCC, blind carbon copy, so that they cannot see to who all, which all vendors this request was sent. And then those vendors, what they do is they will basically then reply back with their quotations. And in the RFQ, both technical as well as commercial aspects are covered. So if I need a vendor who has 10 years of experience, or the vendor has worked in a certain industry with certain type of companies, so they need to show evidences of that as well. Or if it's about good, so I need a specific type of good. So what they will do is they will come back with technical evaluation. They will fill in all the details that I've requested them. They will provide their financials and whatnot. And then they will also provide the rates for those goods. Based on that, all that is compiled, and then a comparative analysis is done. So the analysis is done and a comparative statement of sort is prepared basically. So this comparative statement basically helps in determining that which all vendors are technically feasible, and once we know technically feasible vendors, then we compare that which vendor can we proceed with, which vendor can the company proceed with. So generally the term which is used is L1. L1 is the lowest bidder. So generally the preference is that we will go with the L1 vendor, the vendor which has provided the minimum, which has asked for the minimum amount for a particular good or a service. In certain cases, L1 vendor is not selected. In that, an additional approval might be required, and the procurement would also provide certain explanation why they've decided to not go ahead. So in this entire chain, there are checks and balances, but procurement will be leading, and then the user will also be involved to say that whatever I need is also getting met or not. So I'm trying to explain you the process first, then we will also come to different type of risk, what kind of observation we get, all those also we will cover in the video. So once this comparative is done, we've identified the lowest bidder, we inform that bidder that, okay, now you have been selected, and a purchase order, PO, is issued to the vendor. Um, and in certain cases, contract is also done with vendor. Contract is more detailed basically. Um, Purchase order is more transactional in nature. Sometimes what can happen, a frame agreement could also be signed, wherein we say that these are the generic terms and conditions. If we want to buy anything specific, maybe we can have a addendum contract to it, an additional contract, or what we can do is we can issue you purchase orders, and any specific terms and condition we can mention in the purchase order. But all the generic terms and condition, anti-bribery regulation or compliances, what would be the payment term, what would be the duration, what is the turnaround time agreed for a different type of items, we define all those criteria well in advance in the frame agreement, and if we need, then it will make every other process quite smoother and quicker. So the idea is we want to have as many eligible vendors in our system so as to ensure better competition and quicker procurement. So once this agreement is done, PO is issued. PO has what all item we need, what is the quantity, what is the rate. So you might have heard of a term called three-way match. So three-way match is basically comparison of details, which is rate, quantity, value, item, which is there in PO, which is there in GR, and in invoice. So uh, so once we issue the PO, goods are received based on the terms and condition. What is the INCO term, international commercial term? If it is FOB, if it is CIF, if it is delivery duty paid, or we expect that once the goods and services reaches the buyer's warehouse, then only we will give the payment. So based on that, based on the INCO terms, and in case of services, the different milestone, a GR or a service receipt, GR or SR we can call it, but the more popular term is GR, goods receipt. Service receipt is issued, and it basically validates that user has confirmed that whatever goods and services they wanted, they are in line with the quantities are in line, the quality is in line, and we have received everything properly. And based on that, we can proceed. And then the vendor is informed, and vendor sends the invoice as well. At times, both the goods as well as invoice comes hand in hand. Sometimes the invoice comes later on. Then what happens? We have in finance or in procurement source to pay. Basically, sometimes it's a centralized function also. So payment processing is done in payment processing, or rather before payment processing, IR, invoice receipt. So after GR, it's invoice receipt. IR is done. And for this IR, basically we are recognizing that, hey vendor, we know that we will have to pay you certain amount. So we are recognizing that we are required, and we are booking the expense in our books and records. So while booking the invoice, this three-way match is done, whether the quantities and everything which was there in invoice is matching with GR or is less than GR. Sorry, PO should be highest, then GR should be equal or less than PO, and invoice then finally should be less than or equal to GR. So this is done, expenses booked if everything is okay, all the tax details are correctly filled in, the addresses are correct. So based on all the basic requirements of invoice, this IR detail is finalized and it is booked in the system. So expenses booked, when the due date will come, then the payment would be made based on the due date or payment terms basically. And then warranty period and all so on and so forth would follow. But this is broadly the process. Now let's talk about what all can go wrong in this entire scheme of things, right? What all processes can go wrong. Okay, let's try and cover what all processes can go wrong. So in planning, the risk could be that uh, we procure more than. So how's the cycle? Firstly, we understand process, then we understand risk, and we also understand controls, and then both will help us identify the observations as well. So in planning, what can happen? I overbought. So there is no restriction within the system which is stopping me basically to buy less than or equal to my budget. So budget, there should be some control in place to stop, and then what you as auditor need to check if there is that control is in place or not, to restrict procurement more than the budget or in excess of budget. Sometimes budget relocation might be required or whatever is the case, but that kind of check needs to be done if budgeting makes sense or not. Then PR, if it was approved by relevant people based on the policy. In entire internal audit, it is critical that what comes at the topmost is governance. Governance is basically defined policies, SOPs, etc. So there should be some review mechanism, policies. So whatever procurement is done, whatever approvals were required. So in PR, we need to ensure that those were taken, and whatever necessary checks and balances were required, those are taken. So at times what happens, the person was supposed to approve the PR might not have approved the PR. And what can also happen, the miscategorization, that OPEX, maybe the PR is put as for operating expenditure, but the item was of capital expenditure and vice versa. So we need to check for these kind of things if there is such kind of discrepancy or not. Then in vendor onboarding, we need to see what all compliances were required as per the policy, whether the tax details, the evidences for bank account related details are properly taken, whether here you need to also ensure segregation of duty or SOD, that the person basically in entire internal audit also you need to see there should be 4I principle. Someone is doing something, then it should be reviewed by somebody else. There should be segregation of duty. Segregation of duties means that the end-to-end maintenance of transaction should not be with the same person. If I have the rights to onboard the vendor, if I have the rights to put its details in, let's say, accounting system, and also I have the right to approve its payment or proceed with its payment, process its payment, then it's a problem, right? I can put any account, I can even put my account number. So when the organizations are bigger, the controls are better. These are system based controls, these are implemented in ERPs like Oracle and SAP. So you need not worry. but it's better to understand in detail and identify what all steps are there where segregation of duty might not be there. Also, we need to see whenever procurement is happening, it's not the case that procurement is not putting in its views and it is straight away going with the vendor which was recommended by user or by the customer, because that increases the risk to a larger extent, because now we are not sure that the vendor we have selected, whether the prices we are getting, whether the quality we are getting are up to the mark, and whether it's the best possible price or not. Why? Because we have not gone into the market and tested the waters. We have not checked that who would be able to provide us the best possible results in the limited budget that we have. So best value for money and quality we need to ensure. So for that, procurement needs to be active, and this is something as auditor you cannot check. So this quality aspects, this rates aspect, you can check the process. And if you go into fraud investigation, you can also see if there is any red flag or indicator for fraud. If some vendors have colluded, they are rigging the bid, every time they are making sure that they are getting the better rates, and all of them, one of them will also win, will always win. So those kind of indicators you can always look, that in a particular category this vendor always gets, or these three are the only vendors who always provide their quotations. Sometimes what happens if there is a typo and that typo is consistent in all the quotations after RFQ quotation is received from vendor, right? So if those errors are there in all the quotations, then that is a very big indicator. I found this mistake in a FMCG company, wherein the header font size and everything, the font color and overall performer was same for all the three companies. It's just that the company name was changing. So I had my doubt, and then I went into forensic mode, called that vendor, asked them that whether you can provide me additional quotations because I need to provide those in the company. And then the vendor by mistake gave me the quotation for those two same companies which were there in the um, client's records, which I was auditing. So from there, we were able to establish this entire fraud chain, how the vendors are colluding. So you need to be active, you need to be conscious about this when you are selecting. In RFQ, sometimes what happens, if I want to select a very specific vendor, I will put all the technical aspects in such a manner that only that vendor will get selected. In public sector undertaking, this is very common. If I will say that I need a big four consulting firm or big four audit firm, then the universe is already reduced to four. So there are just four big four audit firms, right? Then I am saying that the big four audit firm, one of them might be our external auditor. So then only three options are left. Then amongst those three, you might say that this should have this much of experience, this and that. So based on that, what happens that I practically am dictating the one vendor. I am identifying that one vendor which I need based on my technical criteria. So you need to be conscious of that. That why are you always choosing this particular vendor and why are you not exploring any other vendor? Or at times what happens, they don't obtain any quotation at all and go ahead and say that this is the best possible way. So if the value or or the policy allows you to do that, still you need to be conscious if it is making sense logically or not. And it's always in your right to ask or understand why this decision was taken. In comparative statement, you need to see that apple to apple comparison is done. Why? What happens sometimes if one rate is excluding taxes, one is including taxes, then they need to be brought at the same level. If in one transportation is included, in one it is excluded. So all those aspects you need to consider before seeing that the comparative statement is factually correct and it is not biased. So in comparative, it needs to be apple to apple comparison and all the figures need to be brought at the same level. Even for comparatives, you need to see that the payment terms should be consistent, or if the payment terms are not consistent, then you need to consider how we have factored in for that in the comparative statement. If some vendor is asking for advance and other one is giving you 90 days credit, and if both are offering same price, so you would always want to go for the vendor who's providing 90 days credit, right? So all those aspects also need to be considered. In PO, we need to see whether it is awarded to the right partner, or sorry, to the right vendor, whether all the required details are there, whether we are specifying what is the date by when we would need it, if we are specifying any particular conditions, any quality parameters in contract, whether all the mandatory terms and conditions which are there in company policy or in the standard agreement, those are there or not. So that also we need to check. In three-way match, what happens at the time of GR? This is a very common problem. What happens? You are not able to actually receive the evidence, especially in case of services, that whether this activity was actually performed or not. For goods, what you can get is a proof of delivery, a POD, a challan which saying that this good was delivered on this date, and somebody from security gate might have put in their stamp saying that we have received this. We might have also seen some quality checks done, and can see those evidences in the SAP as well, or in the ERP. But for services, it is very difficult, and user need to say that this was done or not. And then the invoice, we need to check that all the parameters which are there as per uh, the contract or PEO, whether all those rates are matching, quantities are matching. How do we ensure that the quantities in invoice are correct? If it's a construction, if it is saying that 1,000 square meters, so how can we ensure that the 1,000 square meter wall was constructed or not? So all those aspects you need to be very conscious. You need to ask common sense questions, that how do you ensure that this work was done, or this good or service was delivered. In case of services, in case of construction, all these kind of aspects, it is even more critical and difficult to establish whether those were received or not. And then we see the booking which is actually done, whether that is in line with the invoice or not, and then the payment terms. One risk which is very pertinent, I would say, is we call it duplicate payment. So sometimes what can happen is, um, so let me cover a few more risks. One is duplicate payment. um, in duplicate payment, same invoice could be paid twice. So post facto, you can check it based on the invoice number if for the same vendor invoice number are replicating. And in case we want to see what is the mitigating control, sometimes in SAP it gives an error, or in Oracle also, that this invoice number is already there, or do you really want to proceed? Or sometimes it doesn't allow you also. Against a particular PO, it will not allow you to book invoice value more than the PO value. So that kind of check would also be there. Um, so you need to be conscious if duplicate payment is there or not. Another risk is procurement purchase before PO. So what happens? Um, all these steps are there. You will see documentation for these steps, but this is essentially to cover the tracks, or basically to uh, just meet the policy requirements, but the actual procurement has already happened. So goods were received already. How you can check that? Maybe you can compare the purchase order date with the invoice date, or with the GR date, or whatever proof of performance for services is there, or for good receipt is there, the proof of delivery. You can compare against that date and then question, why have you already procured and then done all these processes? So these kind of risks could be existing. Now, I would not go into too much depth. What we can do is, you can put your questions in comments. You can put your comments on LinkedIn, you can put your comments on YouTube. And then what I'll do is, I'll do a follow-up video wherein we will again cover procurement to pay in more detail. And then we will also cover all the questions that you have. So please feel free to put all your questions there, and then let's follow up this discussion with that. Because if I only talk about things that I find relevant, it might happen that what is important for you, or what doubts you have, might get missed. So let's try and engage as much as possible, and let's try and clarify our doubts. One thing I would also advise is, you can utilize technology in this entire process. Procure to process is something in which visualization, data visualization, process mining, these are very common to identify how lead times, let's say the time taken before between PR to PEO, or between invoice, basically GR to invoice IR, invoice receipt or invoice processing, expense booking, how much time is taken, what all manual interventions are there, how those could be reduced. So on the consulting aspect, how we can make the processes better, also this could be very relevant. So you can identify those lead times and then say that, hey, your process are not very efficient, and let's try and identify the root cause, how we can make it better. So some basic concepts, that there should be governance, there should be 4I principle, there should be segregation of duty, conflict of interest should not be there. So if I have a relative in one vendor company, so I should not be engaged basically in procurement for that particular item, right? So all these aspects you need to be conscious of. And then I would say let's discuss more about all these topics and many more to come when we'll do other videos. So please stay tuned to this channel and please feel free to mention all your requirements or your favorite topics or your questions in the chat, and or in the comment section, and I'll continue to build videos on those. And then see you in the next video. I hope you like the content and please stay tuned for more such informative content. Thank you.